Hey, what's up everyone? My name's Kyle and welcome to my first video on this channel. I'm 26 years old and I've been invested in the stock market for about 5 years now. It's been a crazy ride and honestly, I've made a lot of mistakes along the way, but the most important thing is that I've learned a ton from these mistakes and that's what I'm here to share with you guys. I'm no expert and I don't want to pretend to be an expert in anything stock or finance related, but I wanted to create this channel to document my experiences and investing journey. And hopefully you guys can learn from my experiences and I can learn a bit from you guys as well. So in today's video, I want to dive into my largest portfolio, the one that I've been building now for a few years. I'm currently sitting at just over $60,000 in this portfolio, and I have that money invested across 11 different companies. Today, I'm going to walk you through each of them, why I'm confident in these stocks, and why I believe that they're great long-term investments moving forward. I'm not planning on diving into too much detail into these companies in this video. I just want to provide a brief overview as to what I am invested in and interested in. All right, let's get started with the first company that I'm invested in, which is Amazon. As you can see, I'm sitting on just over 28 shares with a cost basis of $110, and I have a return of 116, almost 117% to date. I first purchased the stock back in October 2022 when it was, I think, about an $86 stock. As a long-term investor, Amazon checks so many boxes for me. They're dominating e-commerce. Their AWS cloud services are absolutely massive, and they're constantly innovating. I see it as an industry leader that's going to continue to grow for years to come. Not to mention they're pushing into healthcare, which I think could be a big growth area, even though it does affect another stock that I'm invested in, which we will get to later. Amazon reports earnings next week on February 6th. I looked up the average 12-month price target for Amazon, and Wall Street has it growing to just about $250 a share. I think that's low. I think 12 months from now, Amazon will be $275 to $300. Next up here, we have Apple. Apple has usually been a pretty safe bet in the market, but I do think that they have kind of slowed down over the last couple of years. For that reason, I have been trimming some of my position in Apple. I now only sit on about 10 shares with a cost basis of $170, and I have a return so far in this one at about 38%. There's a couple things that I just want to point out as to why I have been trimming my Apple position. In 2024, I think they did a total sales of 391 billion, which is only a 2% increase from the previous year. They achieved a net income of 93 billion, which was actually a 3.3% decrease from the prior year. And then also their EPS came in at 6.08 for the full year 2024, which was actually down 0.82% year over year. I know that Apple did just report earnings, and they beat in both earnings and revenue and record a record revenue of 124.3 billion, which is a great sign for Apple. They might be turning things around a little bit, but I think there's better opportunities in the market, and that for that reason, I'm not really interested in keeping a huge position in Apple. With Apple, though, the brand loyalty here is insane, and the ecosystem that they've built around the iPhones, iPad, and Mac, as well as their services, is just crazy. You know, for example, if my phone were to break tomorrow, I use iPhone, and I'd go buy another iPhone. It's too easy, it's too simple, it just makes sense. So they do have that going for them, but for me personally, I am not looking to have a huge position in Apple at this time. Next up, we have SoFi. SoFi I've been invested in for about a year now, but I'm really excited for their future. They're making waves in the financial tech space, providing wide ranges of services from anything from student loans, personal loans, investing, and banking. So that's one of the big reasons that I'm bullish on SoFi is their ability to disrupt traditional financial institutions and create a user-friendly all-in-one app that it really is appealing to the younger generations like myself. I use SoFi for my banking and I love it. I'm going to be a long-term customer of theirs moving forward. One thing I love to see with SoFi is their membership growth. They just reported earnings on January 27th, and they reported total members are up to 10.1 million versus 7.5 million the year before. Wall Street does have them has a price target of about $13.30, which I disagree with. I think 12 months from now, SoFi will be sitting somewhere in the 20s. That's my opinion on this one. I'm excited for them. I have 580 shares in SoFi, which is a larger position in my portfolio, and I already have a return of about 122%. So excited for this one, and we'll see where this one goes over the next 12 months. But I think this is a great opportunity for anyone looking to get into the fintech space. Next up here, we have Shopify. Shopify is one of the best platforms out there for people looking to build their own e-commerce businesses. While yes, Shopify and Amazon are both e-commerce plays of mine, I think they're different enough that it makes sense to own both of them. Shopify is more focused on those small businesses or businesses and brand creation, whereas Amazon is more of your e-commerce marketplace where you go to list products. Currently, I'm sitting on about 54 shares of Shopify, and I have received a total return of about 81.5%, which is great. It's one of those stocks that I bought hoping to build into a much larger position than even this, and as soon as I bought in, it went up pretty drastically, and I haven't quite gotten around to averaging up in this one. I'm excited for their earnings to come out, which are coming out on February 11th. So we'll see what happens here. I'm keeping an eye on this one. I'd love to do a video in depth on Shopify moving forward. Next up in my portfolio, it's Tesla. Now let's talk about Tesla. I know there are a lot of mixed opinions on this one, but for me, Tesla is a company that's leading the charge in the electric market vehicle. They're not just making EVs, they're revolutionizing the way cars are being designed, built, and sold. Elon Musk, I know people have mixed feelings about him, but I think he's a great CEO. And with him at the helm, I think Tesla is constantly pushing the boundaries of innovation. And with the shift forward sustainable energy and electric vehicles, Tesla is positioned to be a dominant force here in the industry for years to come. I have, however, started to trim some of my Tesla position. Right after the election, as we all know, Tesla shot up like crazy. And I think it was a little bit too much too fast. So I have trimmed down my position slightly. I don't really expect on selling much more. Especially Tesla, they just reported their last earnings and they did miss both revenue and earnings expectations. But with Elon, he on the mic, he started talking, and with his guidance, the stock did rebound nicely. So we'll see what happens with this one moving forward, but I'm kind of just confident and happy holding what I currently have in Tesla. Next up here, we have Palantir. Palantir is my biggest win of my investing career to date. I'm currently sitting on about 105 shares. I bought in back when it was an $8, $9, $10 stock. So my current average is at $10.66, and I have a total return coming up on 700%. As we know, Palantir, it's a software, AI, machine learning play. They rely on their government contracts. They're deeply embedded in the U.S. government defense and intelligence agencies like the CIA, FBI. But what's really exciting with them is they are also making a huge push into the commercial space. So we're going to see a lot of other companies starting to adapt and start utilizing Palantir and their software. I have trimmed some of my position. I think I've sold out of about 40 or 50 shares with a PE ratio of about 400 and a forward PE of 172. I believe there's just been too much growth that's already priced into Palantir at this time. This one's a hold. I'm not buying anything right now. They do report earnings on Monday, so depending on guidance, depending on what happens, that could change. But for right now, I think it's a hold. Analysts have it overpriced. They have it coming in at a 12-month price target of $56 with high estimates in the 90s. But yeah, for me, if you haven't already bought into this one, I would wait and kind of see how it all shakes out and see if there's any dips moving forward where it might make sense to start a position. Next up, we have Hims. Hims is a company that specializes in men's health products. I have about 60 shares. Cost basis is at $14.38, and it's already gone up. I have a return of 161%. I started this position in May, and it just immediately shot up, which I was actually pretty bummed about because I was hoping to get this position quite a bit larger because I do see the potential here. That being said, I am not currently buying or averaging up because I do have concerns with Amazon. Amazon announced that it would start selling generic hair loss medications late last fall. Amazon, I looked into the pricing. Amazon's pricing for some of these hair loss medications is at $16 versus I think Hims is around 22. So, I think that the people who are already using Hims will keep using Hims. They'll keep being loyal to the brand, but I think it may affect new business coming in as, it's just a numbers game for people. They're going to shop and find the best price available to them, especially with a company like Amazon that already has a lot of trust in the public markets. Next up, we have Celsius. This is a new position for me. I'm sitting on 84 shares and a cost basis of $26.94. And so far, I'm actually down about 3.28%. But I do see this as a stock that has a lot of potential to get back to growth here moving forward. As we know, Celsius, they're an energy drink company, and they're in the healthy energy drink business. So unlike your Monsters and Red Bull, they're more focusing on fitness and wellness. They've been decimated, and I think a lot of that goes back to the Pepsi deal that they have. Pepsi, I think they own 8.5% of Celsius, and they way overbought with inventory last year. So they've been scaling back how much they've been buying, and that has hurt Celsius's numbers, and it's made for some difficult comps for Celsius. I do think though that as Pepsi gets through their inventory, they'll start back up with purchasing more inventory from Celsius, and I can see this getting back to growth here in the back half of 2025. Wall Street, I think they kind of agree. They have a 12-month price target of $38 with the high estimates coming in the low 60s. So there's definitely a lot of room for growth in this one. And if you're at all interested, I'd say now is a great time to jump in, as I don't see it getting much lower than, $20 a share. I think it would be the bottom. So we'll see how this one all shakes out, but I'm really excited to see how this one performs in my portfolio. Next up here, we have Nike. Nike is one of those companies that I just believe will always be a pretty decent investment. Obviously, they haven't performed in the last year. I think they're down like 70% over that time. But I do think that with Elliott Hill getting back in there as CEO, I think he's going to turn a lot around for Nike. Currently, I'm at 66 shares with a cost basis of $76. And I am up a little bit. I'm up 2.5%, but Nike's really been pretty stagnant here in the 70s for the past 3 or 4 months since I first started buying. So we'll see how this one shakes out, but I am confident that we are close, if not already bottomed for Nike. So we'll see. Nike or Wall Street has a 12-month price target of $86 with high estimates coming in at $120. So we'll see how that one shakes out. But I am confident, and Nike does pay out a pretty good dividend, so that will be nice along the way as well. Next up, we have Estee Lauder. Estee Lauder is a cosmetic and skincare company. They have a ton of different brands within the Estee Lauder family, so they have a very diverse portfolio, and that I do think lowers the risk with this one. Obviously, if you go look at the 12-month, 18-month chart, Estee Lauder has been completely decimated. I think they were a $300 stock 12 months ago, and they've dropped all the way down into the 60s. That's when I pulled the trigger on this one, and I think that could be the bottom. We'll see how it goes. They do report earnings next week on Tuesday, the February 4th. So I'm excited to hear what they have to say. They did just appoint a new CEO on January 1st who has a lot of experience. I think he's been within Estee Lauder for 25 years, but he's being tasked with, turning the ship around, righting the wrongs, and getting Estee Lauder back to a very profitable, successful company. So earnings and revenue have been a struggle for them for the last 12 months, but I think moving forward, we're going to have a lot of growth and I think it's a great opportunity right now to get into this one before it really takes off. Currently, I only have 42 shares, cost basis of $66. It's one where I was hoping it would stay down that $60-$65 range, and unfortunately just hasn't. It's gone up. I could average up, but I wouldn't be surprised if this one does go back down into the 70s at some point. I don't know for sure yet if this is bottom. So it's one that I'm keeping an eye on, but I'd love to add more to this position. Last up, we have AMD. AMD is actually my newest position, and it's one that I've really invested heavily into. I'm currently at 50 shares with a cost basis of $127, but I am down about 7%. AMD, it's a powerhouse in the semiconductor industry and with the growing demand for chips and everything from gaming to AI and data centers. I think they're in a prime position to capitalize on that. Obviously, they are competing with the big dog NVIDIA, but I do think they are a more diversified company than NVIDIA. And with NVIDIA already having gone to the moon, I think there's a much greater risk reward with AMD versus NVIDIA, just because we haven't seen that growth yet with AMD that we have with NVIDIA. So they report earnings on Tuesday. It's another one that I'm really anxious to listen in on. I'll probably make a video on AMD earnings sometime next week. So stay tuned for that one. So there you have it. That's all 11 stocks I'm currently invested in. Now, again, I'm not a financial expert, but I have spent a lot of time researching these companies, and I do believe in their long-term growth stories. As you could also probably see from this video, a lot of these companies are reporting their earnings next week. So it's going to be a really big week for me in my portfolio. I will definitely be posting some videos after earnings for a lot of these companies just to dive into the reports and kind of see what's going on with them. So yeah, let me know what you think of the video. Let me know if there's any stocks specifically that you'd like me to make a long form video on. I'd also love to hear of any companies that I'm not currently invested in that you guys are looking at or invested in yourself. So thank you so much. Please like and subscribe for more, and I will catch you in the next video.